Now, I'm not sure if you saw this piece in the News Corp papers, but claims of underquoting against real estate agents are on the rise as Sydney house prices regularly soar past their price guidance. Now, this is not the first time it's happened, is it? I know we've spoken about this before. I want to get to Peter O'Malley. He's a principal at Harris Partners, and he's here in the studio with me. G'day, Peter.
Good evening, Luke.
First off, where is the market right now in Sydney? Has it got to the bottom on its way back, or where do you assess it?
We're undergoing a strong recovery phase, particularly in housing, less so apartments. And that's why suddenly we've got auctions and sales that are soaring past agents' price guides, and consumers are concerned that they've been victims of underquoting. Yeah. And what I'd say in regards to underquoting, Luke, is being outbid at an auction does not mean that you're a victim of underquoting. It means that you're outbid.
Right. Okay. So let's define underquoting in terms of what fair trading, etc. would call it.
Underquoting is quoting to buyers a price lower than what the agent has told the vendor to be prepared to accept.
Right. So at the conclusion of the sale, the agent then has to go to the vendor and do some fast talking. Would that be right?
Well, what we often say about the auction system is there's buyers there on the day who think they're going to buy the respective property for a cheap price because of underquoting, and vendors have gone to auction because the agent has promised a high price at the auction. What is happening at the moment, though, is agents are probably quoting around market price, but the market price is drifting up on the back of these low interest rates and easier credit conditions. And in fairness to agents in the current market, sales are exceeding all expectations. So it's important to note, Luke, that the complaints about underquoting have gone up, not the actual charges of underquoting have gone up.
Yeah,
yes.
Okay. How do you come up with the market price? Is there? I know there are various services that provide a kind of summary of what's happened lately, but is there one accurate, across the board accepted market price?
As real estate agents, we're trained and compelled by the Office of Fair Trading to give prospective vendors 3 directly comparable and very recent sales.
Okay, so how does that work?
Well, you need to go on if you...
Is that in the same street, same suburbs, same... How do you get
Certainly same suburb. Same street is a bit tight.
Okay.
So it would be an expectation that it's the same suburb within the last month. Now, that's normally a fairly doable task. In some instances, real estate agents don't have sufficient data or recent sales in which to form an opinion.
Yeah.
But the point being is that when I go into an appointment at the moment, the last 3 comparable sales are at a softer price point than I know that I'm going to be able to achieve on the coming Saturday, because the housing market, less so the apartment market, as I say, is in an upward swing at the moment.
The apartment market, is that affected by a greater supply? Is it affected by, Mascot Towers and Opal? What sort of things have affected that?
It's impacted by sentiment, as you've just touched on there with the Opal Towers, Mascot Towers issues.
Yep.
There is oversupply, and we now have a dramatically falling rental market in Sydney particularly. It's improving in Brisbane to some degree, but the rental market in Sydney is very soft.
Why is that the case?
Coming back to oversupply.
Okay. So how do you deal then with, someone who's got an investment property? There must be some anxious phone calls.
Well, investors are sort of feeling it at the moment because they've got rising costs and falling income. Now, you'll note if you look at the graphs that developers' new applications are pulling back. So developers are holding off from coming into the market with new stock. Yeah. So 2022, you'll probably see the market consolidate as the oversupply is absorbed.
Right.
But in the next 12 months, investors can expect softening rental returns, unfortunately.
Okay. Are there good parts in Sydney right now and good parts in Brisbane right now? For example, the inner city in Sydney, I think I read through the course of the day that that's a bit soft. But from your experience, where is it good and not so good?
The inner west was particularly soft late last year, and it's particularly strong now.
Okay.
So for some time now, Luke, I've held the view that inner city housing is the safest bet, and high-rise apartments in suburbia is the weakest bet.
Right. And you operate, don't you, in effectively the inner west, is that right?
That's right, yeah. Well, we do cover a bit of the eastern suburbs and go further west as well.
Yeah.
The eastern suburbs suburbs is particularly strong at the moment with these record low interest rates that are set to go lower in the next 6 months. If you're secure in your financial situation, there literally has never been a better time to buy in that regard.
So there's lower interest rates, but I think it's not as easy to get a loan as it was maybe 2 or 3 years ago. Is that bitten? Did that bite at some point?
It's harder to get a loan now than 2-3 years ago, but it's easier than it was 9-12 months ago, Luke,
right,
which has been a massive contributing factor to the bounce in the market.
Yeah.
So banks were forced up until the election to assess every new home loan on an interest rate of 7%. Now, there's no chance in Hades that we're going anywhere near a 7% interest rate.
Of course.
So APRA, the banking regulator, allowed banks to set their own level as to where they deem a safe serviceability on each person being at.
Yeah.
And suddenly you had a whole wave of buyers that qualified for a home loan that otherwise wouldn't have, and that's helped the surge with the lower interest rates.
Gotcha. And what about clearance rates now? I get the impression from what you've said that they're on their way back up. Is that right?
Oh, they spiked sharply in the last 4 to 6 weeks.
Oh, really?
Yeah, albeit, and this is a big point here, Luke, on very, very low volumes. We're at historically low volumes at the moment. So one of the key market indicators heading into spring is how does the clearance rate hold as it sees the inevitable seasonal surge of stock.
Okay, so the seasonal surge of stock, will that make the supply numbers what they've been in previous years, or will it still be down?
I expect a lot of vendors will be tempted to come into the market.
What's held them back?
A lot of indecision in the economy,
right,
in the marketplace. Prices have been down.
Yep.
We've probably seen some instances of negative equity.
Yep.
In saying that, some of those factors have unfortunately forced people to sell.
Yes.
So there's a disproportionately high number of people that have sold in recent times that had only bought 12 or 18 months earlier.
Wow.
And that, unfortunately, is a leading indicator of mortgage stress.
Yeah. And what do these people say when they come to you? I mean, I guess you can tell, or you can assume, can you, Peter, that if they bought it a year ago or a year and a half ago and all of a sudden they're going back to market, something's happened?
Yeah, some people will give full disclosure to their circumstances. Others will just say, we don't like living here now and we want to see what price we could get.
Yeah.
In the market that we've just come out of, we had to be really tough with vendors and say, look, unfortunately, we can't break you even. Most likely, you're going to leave here with a loss when you factor in your transaction costs and where the market's moved to.
Yeah.
If you can afford to hang on to the property, you're probably better off doing so.
Right.
And those that could afford to hang on will be very happy at the moment because we have had a fairly decisive bounce. So I think the market may have been down as much as 15 to 16% at one stage, Luke, and I would say the bounce in the last 4 months has made back half of those losses.
What about the sentiment that buyers might display to you when you first meet? They would be aware that things are not perhaps as they were a few years ago. So I guess they're kind of resigned to the fact, are they, that it might be on the market for a while, or the price they had in mind mightn't be there? Or are you now able to tell them from this bounce you're talking about that, in fact, it's not quite happy days again, but if we're patient, there's something good there?
Yeah, look, vendors have got a much better story to work with at the moment.
Right.
There's two types of buyers at the moment, those that accept the market is suddenly rising and those that are in denial about having missed the bottom of the market and are saying it's overpriced, you want too much for your listing, it won't sell. And if you are in the market at the moment, I encourage a buyer to accept the housing market does seem to be bouncing along, but it could be what's called a bull trap, where the market could have a brief rally, Luke, and then it could undergo a correction phase again.
Whoa.
We don't know how the market will perform into 2020, 2021. If the only way you can bring confidence to a property market is by feeding it with more debt, that's a flashing red light. So there's a positive story out there at the moment, but there's definite risks as well.
Bull trap, I haven't heard that before.
Yeah.
And I guess to some extent, so you're talking there about lower interest rates. If people enter the market because the interest rate might be even lower, unimaginably as that might be now, the reality is at some point they're going to turn around. I guess that comes back to the bank being good at understanding the risk in offering the money. I'm
probably not seeing interest rates as the major risk to someone who's buying at the moment.
Right.
I think changed financial circumstances, i.e. a job loss, is the major risk. See, low interest rates are only good for someone that's got a job.
Yep.
So if we do see unemployment push up because of global concerns and the trade war, etc., and Chinese money pulling out of Australia, and we see the economy under pressure, I noticed that commodity prices are under pressure at the moment, for example.
Yes.
So if you see people loading up on debt to get into the housing market in 2019, but the economy takes a vicious turn at some stage in the next few years, those people will get caught out, unfortunately. So one needs to be really prudent about the way they manage their affairs.
Peter O'Malley is the principal at Harris Partners. Before you go, we had a conversation, mate, must have been a couple of years back now, about the international buyers in the marketplace. And we've got a clear understanding, I think, that there were plenty of them.
Yes.
Are there plenty of them now or not?
No, there's not. I think any buyer buying from Hong Kong or China is probably buying illegally, because there's strict capital controls on being able to take money out of China and Hong Kong.
Wow.
So interestingly, I have noticed a few more mainland Chinese buyers at inspections in the last few months. Now, I'm not suggesting those particular people are doing the wrong thing.
Of course, yeah.
But it's just I have noticed that there's been more looking. With the Australian dollar dropping well below 70 cents now and heading possibly into the mid-60s, I think you'll see a lot of expat buying taking place.
Okay. But the situation that was, and reading between the lines, you go to an auction and there might be, majority, if not complete, overseas investors. Those scenes at auctions that might have been around a couple of years back, they're not around anymore. That
is clearly not happening at the moment.
Right.
Now, it's really important is the Australian government taking credit for stopping foreign buyers from buying our local real estate, but they were happy to walk through our rules and laws.
Yes.
What stopped them is the Chinese government and their capital controls.
Yeah, excellent. Peter O'Malley, as I said, he's a principal at Harris Partners. Where's Harris Partners?
In the inner west, Balmain, Luke.
Balmain. You a Tigers boy?
That's right, indeed.
I knew that. Big game. Good luck on the weekend.
Thank you, Luke.
Good to see you, Peter. Peter O'Malley.